What is up, everybody? Welcome back to the Crypto Sherpa Show, where I cover the most recent cryptocurrency news articles. That way you can stay up to date, what's going on in the space, and then, so welcome back. Happy Tuesday, everybody. It's been a great day today. Bitcoin passing 90,000, so we passed that support level. Next up, 95. We're going to touch that. We're going to hover around here, but just looking at this chart right here, I am loving the way it's looking right now. But we have tons of news articles to go over with you today, like has Bitcoin finally decoupling from the traditional financial sector? I don't know, maybe this isn't the first time that happened. Like Bitcoin has decoupled like from traditional trade fi, where stocks are down, bonds are down, all those stuff down, but Bitcoin is going up. So we're kind of seeing that right now. We have an article that breaks it down for you. And then also we got news on crypto firms getting more into the traditional financial sector. So yeah, lots of news going on there. We see here on this little article, I knew Kathy Wood purchased some Bitcoin yesterday, but I couldn't find an article talking about it. But I did come up with one of her buying Solana, because I have a whole thing about that right now too. It's like, what's going on with Ethereum and Solana? Solana's kind of like outpacing it. Are people making the move over there? Is Ethereum going to go away? I don't know, but let's go over the news today, learn a little bit about what's going on and what's happening. So first up again is the Bitcoin is decoupling and it doesn't care about tariffs or earnings report. This one's coming from Bitcoin Magazine, and Bitcoin's decoupling is driven by fundamentals, no earnings, no tariffs, no central bank, just a neutral, scarce reserve asset in a politicized world. So Bitcoin's decoupling from traditional markets is becoming more visible as global capital stress intensifies. A resurgence of tariffs, elevated interest rates, and softening corporate earnings have introduced renewed volatility across equities and credit markets. Now, many large cap companies are underperforming, weighed down not by fundamentals alone, but by geopolitics, trade policy, and policy uncertainty. And yet, Bitcoin's price is gaining ground. Now, it's a movement. Its movement is not erratic, and it's not detached from reality. It's increasingly independent, not just in terms of asset performance, but in forces that drive it. Bitcoin is to behave less like a high beta equity instrument and more like a structurally differentiated asset. Now, as Jurian Timmer, director of global macro Fidelity, posted recently, gold remains a stable store of value, while Bitcoin's volatility makes a strong case for holding both, as shown by the Sharpe ratios. Now, for corporate finance leaders, that evolving risk/reward profile and its growing divergence from traditional finance or traditional assets out there warrants serious attention. Now, a high Sharpe moderately correlated its outlier, so Bitcoin remains volatile, but the volatility has delivered results. Its Sharpe ratio now exceeds most traditional asset classes, including U.S. equities, global bonds, and real assets out there. Now, this suggests that on a risk-adjusted basis, Bitcoin continues to outperform even through cycles of stress and recovery. And we see here in the chart, it always recovers. So it may be a little scary, when we see these little dips, but if you're just holding on for that long term, because we know where Bitcoin's going, it's always going to rebound. But at the same time, Bitcoin's correlation to the S&P 500 has declined to moderate levels. In practical terms, this means that while it may still respond to shifts in global liquidity or investor sentiment, it is increasingly influenced by structural distinct factors. Now, what are they? Well, there is sovereign level accumulation, spot ETF inflows, supply side compression events like halving cycles, global demand for neutral reserve assets, and this shift in behavior. Where did I even go? Yeah, so this shift in behavior profile from risks on correlation to structurally differentiated performances underscores why Bitcoin may be maturing into a strategic reserve asset and not just a speculative one. Now, Bitcoin's core structure is decoupled by design. Even when Bitcoin traded in lockstep with tech stocks in past cycles, its underlying characteristics remain distinct. It does not generate earnings. It does not value based on cash flow projections, product cycles, or regulatory guidance. It's not subject to tariffs, labor cost shocks, or supply chain constraints. Now, today, as U.S. equities face pressure from rising protectionism and fragile earnings growth, Bitcoin, why does it keep doing that? Bitcoin still remains structurally unaffected. It is not exposed to the trade friction between major powers. It does not rely on quarterly performance. It does not It's not vulnerable to monetary tightening, corporation taxation, or sector rotation. Bitcoin's independence from these forces is not a temporary dislocation. It is the consequence of how this asset is built. It's global, liquid, censorship resistant, and politically neutral. These attributes are what make it increasingly attractive, not as just a growth asset, but a strategic capital reserve. Now, Bitcoin's risk is uncorrelated to the corporate operation model. The distinction is often missed in treasury discussions. Most corporate risk exposure is concentrated within the same system. Revenues are denominated in local currency, reserves are held in a short-term sovereign debt or cash equivalents, credit lines are priced according to domestic interest rates, and equity is valued based on business cycles and central bank guidance. Now, these exposures create layers of correlation between a company's income, reserves, and cost of capital, all driven by the same set of macro conditions. Now, Bitcoin operates outside of this loop. Its volatility is real, but its risk is not derived from corporate earnings, the GDP trends, or the policy cycle of any single nation. Its value is not impaired by negative earnings, surprises, or declining consumer confidence. Its performance, it's not diluted by monetary expansion and politicized monetary policy. For this reason alone, Bitcoin introduces a type of capital exposure that is orthogonal to typical treasury frameworks. This is what makes it useful, not just as an asset with asymmetric upside, but a true diversifier within a corporate balance sheet. So in conclusion, independence is the feature, not the flaw. Bitcoin's decoupling from traditional markets is not perfect, nor is it permanent. It will still respond to a major liquidity shock and a macro stress event, but its growing independence from trade policy, earnings seasons, and policy expectations is structural, not speculative. Now, it has no earnings, no tariffs, no boardroom, no monetary authority there. It is, in effect, a monetary instrument that is immune to many of the systematic pressures facing public companies. Now, for corporate leaders focused on long-term capital strategy, this independence is not a bug, it is the feature. And as a capital becomes more politicized, inflation more entrenched, and traditional reserves more correlated, Bitcoin's differentiated profile becomes not just defensible, but strategically necessary. So everybody needs to get on board with it. But yeah, so Bitcoin is doing some great things right now. Will it still perform as a decoupling asset? Like, we'll see. We'll just gotta wait and find out what's going on. But again, like with these factors, it's like there's no corporate structure to it. So why are we comparing it with that? So yeah, so that is some great news for Bitcoin right there. So hopefully you learned something from that. Now let's move on to our next article on how crypto firms are moving into Wall Street territory amid a growing synergy. Now, there's a growing synergy between the worlds of traditional finance and cryptocurrency. As crypto platforms plan more TradeFi offerings, BitGet CEO Gracie Chen told Cointelegraph this. And here we have, who is this one? Lebowski? No, it's not Lebowski. What movie is this from? The Great Gatsby. And we have Leonardo DiCaprio, Leo, right there, tipping the glass to us all. But cryptocurrency firms and exchanges are increasingly moving into Wall Street territory, launching more traditional investment offerings and showcasing the increasing connection between crypto and traditional finance. So there is a connection there, but as we saw, it sometimes gets decoupled. But there's a growing synergy between traditional financial investments and the emerging crypto space, according to Gracie Chen, the CEO of BitGet, the world's 6th largest crypto exchange out there. Now, crypto players are now checking out traditional finance as they see the opportunity to bridge it, Jen told Cointelegraph. Now, the lines are blurring. Investors want flexibility and products that can straddle both worlds of naturally attractive. Chen said that some players see TradeFi as a safety net. Others, like BitGet, see it as a launch pad for broader adoption. And she added that in a volatile market, integration is smarter than isolation. So, is smarter than isolation? Because I think she's referring to the self-custody versus trusting a centralized entity to hold on to it. Sure, it makes it easier, and yeah, it's just more, you're more used to the way it looks and feels because it matches TradeFi. But I will disagree that I believe that isolation, self-custody is the most important thing when it comes to crypto. You want to be in control of it, not your keys, not your coins. If you don't hold it, you don't own it. So I'm all about that. But I do agree, though, that this will onboard a lot of people in the space. I just hope they do come to the conclusion that they rather hold on to it than just leave it on an exchange platform out there. But let's continue on with the article. Now, Chen's comments come a week after crypto exchange Kraken launched access to 11,000 US listed stocks and exchange traded funds as the first part of the global expansion into TradeFi offerings. Now, Cointelegraph reported on April 14th that Kraken's expansion into traditional stock offerings was announced a week after the S&P 500's record-breaking two-day loss of over $5 trillion, triggered by the US President Donald Trump's reciprocal import on tariffs announcement on April 2nd. Now, Coinbase CEO Brian Armstrong also echoed a similar vision during the company's last earnings call. Armstrong said that Coinbase aims to help modernize the global financial system and bring more of the world's GDP into crypto rails. He said that we think that it's more efficient, fair, free, and the world that will accelerate progress, and it creates an economic freedom, he said during Coinbase's latest earnings call. So I guess if he does want to modernize the global financial system, kind of makes sense why Coinbase is filing for a U.S. banking license. So we'll cover this article next. But crypto and TradeFi relationships is inherently symbiotic. The relationship between digital assets and more traditional assets is inherently symbiotic. A spokesperson from Coinbase, the world's third largest crypto exchange, told Cointelegraph, adding that the core to our mission is to enable economic freedom by onboarding 1 billion users to crypto. It is supporting more of our traditional finance to be integrated with crypto. Now, as regulatory clarity and institutional adoption increases globally, we expect more of the global GDP to be running on crypto rails, the spokesperson added. Now, blockchain technology brings speed and transparency, while TradeFi introduces trust, skill, and compliance. In an inevitable convergence, Omri Hanover, general manager at GemStrade cryptocurrency platform, told Cointelegraph that together, TradeFi and crypto unlock new pathways for both retail and institutional investors, especially those seeking exposure to digital assets without navigating the full complexity of native crypto products, he explained. Now, traditional investment platforms such as eToro and Robinhood have also launched cryptocurrency offerings. Now, a warning on that one for those of you who purchase on Robinhood and never withdraw on crypto from it, like send it off from Robinhood to your own personal crypto wallet. Just be aware that I've experienced this on multiple occasions, helping some clients here during some consultations that's moving from crypto from Robinhood over to their wallet. If you do one tester transaction out there by just sending it off, just be prepared for your Robinhood account to be flagged, and just you won't be able to use it until you just go through the entire hassle of their customer service. Like, yo, I just moved my own crypto to my own wallet. What's up? Because, yeah, 2 separate occasions, I helped some people move their crypto from Robinhood to their wallet, and that precise situation happened every single time. So like if someone comes in and wants to move their crypto from Robinhood, it's like, well, if you got one token, I can help you out with one transaction. I'll do it all in one go, because I just know it's like dealing with the customer support on these exchanges and platforms are sometimes so terrible just try to get a hold of somebody. So it's like, let's just get this all off right now. I'll watch you do it. I'll help you do it. So that way there's no mistakes happening. And that way they can get all their crypto off it and not have to worry about just it being stuck on Robinhood. Their account's frozen. Now they don't have access to their money. So just be aware of that. But yeah, so these platforms, they make it easy to onboard, buy, trade, and do all that stuff with cryptocurrencies. But again, you're sacrificing your self-custody for just ease of use, and that's never a bueno thing to do. So no bueno. Just always hold on to your crypto assets and keep them on a nice, secure crypto device. And you know what, let's just go straight to an ad right now. It's been 14 minutes, because speaking about just security and keeping your assets safe, maybe consider a crypto-only laptop. So here, let's play this video.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges, it's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.
And we are back. So TradeFi is great. It can onboard a lot of people. Just I hope they eventually do learn that self-custody is key, and maybe they'll consider a crypto-only laptop. So let's continue on with our next article on how Coinbase is considering applying for a U.S. banking license, because they did say they want to bring the global markets to a billion people out there. So let's hear about this article. So Coinbase confirmed that it is considering applying for a U.S. federal bank charter amid moves by crypto firms to integrate with the traditional financial system. So this is going a little bit further on that last article. So U.S.-based publicly traded crypto exchange Coinbase confirmed that it is considering applying for a U.S. federal bank charter. In a statement sent to Cointelegraph, Coinbase said that it is considering pursuing a U.S. federal bank charter, according to the company's spokesperson. So they said this is something Coinbase is actively considering, but has not made any formal decisions yet, said the spokesperson. And here we got the Coinbase crew going, yeah, ooh. But the comments follow recent reports suggesting that Coinbase and multiple other major crypto firms were planning to apply for U.S. banking licenses. Coinbase stablecoin issuer Circle and Paxos and crypto custodian BitGo were the other firms mentioned. Now, Coinbase did not clarify to Cointelegraph why it is considering pursuing a bank charter. Still, a license could potentially allow crypto firms to operate like traditional lenders out there, taking deposits, making loans, and Cointelegraph also reached out to the other firms reportedly considering applying for this charter. But still, firms that obtain banking charters are subject to stricter reporting and regulatory oversight. One example is Anchorage Digital, a crypto firm holding a federal bank charter. Now, despite the firm obtaining the license, recent reports indicate that the U.S. Department of Homeland Security's El Dorado Task Force has launched an investigation into Anchorage Digital. So these exchanges, they do get these licenses. They may be scrutinized by stricter regulations out there. Now, many crypto firms are likely to apply. The reports also follow the U.S. Office of the Comptrollers of Currency granting a preliminary conditional approval for a U.S. bank charter to Paxos back in 2021. Firms may now be considering applying as U.S. regulators take a softer stance on crypto regulation and integrating stablecoins into the broader financial system. Now, the change in stance is visible at multiple levels of the U.S. federal government. Federal Reserve Chair Jerome Powell recently said that as digital assets gain mainstream adoption, establishing a legal framework for stablecoins is a good idea. He also recognized that crypto space delivered a consumer use case that could have a wide appeal. Now, why isn't he already just lowering interest rates so that way people can buy more, right? He's getting too late. Like Trump threw him through the ropes on like one of these articles I saw, just saying you're too late, Gensler, so we need someone new. But evolving U.S. stablecoin regulation, the U.S. House Financial Service Committee passed a Republican-backed stablecoin framework bill earlier in April. The Stablecoin Transparency and Accountability for a Better Ledger Economy is another bill that is moving through the U.S. legislative process and is the guiding and establishing national innovation for U.S. stablecoins. The Stable and Genius bills differ in how they regulate the stablecoin industry in their current form. Now, the Genius Act was introduced first and passed the U.S. Senate Banking Committee in mid-March, and the Stable Act, on the other hand, emphasizes federal oversight, while the Genius Act seeks a more flexible path that considers both state and federal regulations. Now, the Stable Act would enforce a 2-year moratorium on issuing collateralized stablecoins that are backed by self-issued digital assets. The bill would also require that stablecoin reserves be held separate from business funds. Now, the Genius Act would establish a legal framework for stablecoin payments and leverage U.S.-based stablecoin issuers in an attempt to reinforce the dollar's global dominance. Now, the bill would also enhance anti-money laundering safeguards, reserve and liquidity standards, and sanctions checks. It classifies stablecoin issuers as financial institutions. So maybe with all these stablecoin acts and bills going through is hence why like these crypto exchanges need to get a chartered banking license out there. Or who knows, maybe it goes even deeper. We all know the banking industry hates cryptocurrencies. Like they will like cut you off in many different corners of trying to buy Bitcoin or crypto out there. They're always going like, what are you buying? What is this for? Like, and like you give them an answer and they go, oh, I don't like that. That's a risk to us. So we're not going to allow you to do it. So maybe that could be a reason also why they're getting it, just to make it a little bit easier just to onboard. But yeah, so Coinbase is just one of the two guys out there, like at least applying for this. So, Now let's continue on with some more politicized news because the incoming SEC chair just got sworn in. That's right, Paul Atkins officially is the new SEC chair, and he gets to now weigh in on more than 70 crypto ETF filings out there. So are we going to be seeing a Solana and XRP ETF very, very soon? Maybe. So let's find out. So spot crypto ETFs are currently limited to Bitcoin and Ethereum in the US, but analysts expect a new approval this year. So incoming SEC Chair Paul Atkins will have an avalanche of crypto-related applications to sift through when he officially takes control of the regulator. Hopeful issuers now await feedback on 72 crypto-linked exchange-traded funds in the US, including requests to list options, according to Bloomberg ETF analysis Eric Bashunas. He said this is going to be a wild year, that he said on X, formerly Twitter, on Monday, noting that ETF hopefuls have positioned themselves to offer funds for asset ranging from Solana to the First Lady's meme coin, which I'm shocked about that one. But here he's showing like all those list approvals of it. There are now 72 crypto-related ETFs sitting with the SEC, waiting for approval. Everything from XRP, Litecoin, Solana, Penguins, Dodge, and 2x Melania, and everything in between. It's going to be a wild year, so great roundup from JSIP. And here we can see that. Now, Atkins was confirmed as a U.S. President Donald Trump's pick to lead the Securities and Exchange Commission by a full Senate vote around 2 weeks ago. His swearing-in ceremony is expected to take place soon. Actually, it did just happen. We just got news on that, marking an official start to the SEC's push to regulate crypto collaborations under new leadership. Now, although Atkins was a proponent of deregulation during his previous stint at the SEC, analysts say that the crypto-friendly veteran may have to make a few first-time calls, specifically when it comes to which cryptocurrencies can be approved for listings and as commodity-based trusts. Now, Bashunas did not immediately respond to a request for comment from Decrypt, but last year, the SEC approved spot Bitcoin and Ethereum ETFs under former SEC Chair Gary Gensler. While the approvals represent a landmark moment for the crypto industry, it raised deeper questions about which cryptocurrencies should be regulated as commodities and therefore be allowed to trade on Wall Street in a similar fashion to assets like gold. Now, in total, asset managers are looking for feedback on applications tied to 15 different cryptocurrencies beyond just Bitcoin and Ethereum. Now, those include applications centered on digital assets with large valuations like Solana, Dogecoin, XRP, alongside relatively nascent ones like Solana-based tokens, Bonk, Pengu, official Trump coin. So I feel like we'll probably be getting more Solana, Dogecoin, like the big guys out there, not just these tiny coins out there. But under acting SEC Chair Mark Ulita, the agency has chipped away at some regulatory uncertainty. In February, the SEC said that it generally doesn't consider meme coins to be securities, but it didn't advise whether they were fitted for Wall Street wrappers. Now, for assets like XRP, the SEC won't be forced to make a decision immediately after Atkins takes reins at the agency after punting on XRP ETFs in March. The agency can delay its final decision until mid-October. So we gotta wait till mid-October to maybe hear about an XRP ETF? We'll see. Now, with these ETFs and everything, is it really going to affect these other altcoin cryptocurrency prices? Like, I really feel like the only one that really didn't matter was like the Bitcoin one. Because once we got approval of that, like so much money inflowed into it, and we saw Bitcoin's price rise because it came out when like Bitcoin's price was like at 20,000, 25,000. Maybe it was at 30,000. I'm trying to remember that. But it was around that low when it first got launched before even the Bitcoin halving took place. And so with all those inflows in there, eyes on Bitcoin, that definitely pushed us to the new all-time high before the halving event that happened. And then we had the halving. We sure had a little dip, but no, price is still holding strong because Bitcoin's just a scarce asset out there now, because now the amount of new Bitcoins that come out after the halving was cut in half. So instead of 6.12 Bitcoin coming out like every 10 minutes, now it's cut back to 3.12. So just a simple supply and demand out there. But will ETFs really affect like these other currency prices out there? I don't think so, but you never know. We just got to wait and see. But speaking of ETFs out there, I know Trump did want to launch a couple with Crypto.com, and I guess they did finally just finalize that agreement. So yes, so Crypto.com and Trump Media have signed a binding agreement for the former to launch its ETF through the crypto exchange. So Crypto.com and Trump Media have reached a final agreement for their partnership towards the launch of the latter's crypto ETFs. The crypto exchange will assist in the US president's company in launching these ETFs, which will focus on digital assets and some securities. Now, Crypto.com and Trump Media signed the binding agreement. In a press release, Trump Media announced that it has signed a binding agreement to partner with Crypto.com and Yorkville American Digital to launch a series of exchange-traded funds and exchange-traded products through the Truth.fi brand. Now, this follows a non-binding agreement, which the parties signed in March. As part of the agreement, Trump Media's ETFs will be available through Crypto.com's broker-dealer, Forest Capital US LLC. Now, the ETFs will comprise of digital assets and securities with a focus on Made in America, including industries such as energy. And as CoinGate reported in February, Trump Media filed trademarks for the Truth.fi Bitcoin Plus ETF, Truth.fi Bitcoin Plus SMA, and Truth.fi Made in America ETF. No, and there's more. There's also Truth.fi Made in America SMA, Truth.fi US Energy Independence ETF, and Truth.fi US Energy Independence SMA. So all patented by Trump. Now, according to the press release, these funds will launch later this year and subject to regulatory approval. They will be available internationally, including the US, Europe, and Asia across existing platforms and brokerages. Now, commenting on this development, the CEO of the top crypto exchange, Chris Marszalek, said that Crypto.com is the leading platform to bridge crypto and traditional finance. And this agreement is a testament to those capabilities, and this partnership gives the Trump Media ETF global distribution power by the Crypto.com platform. It's a win for Trump Media, Crypto.com, CRO, and Yorkville American Digital. It is also worth mentioning that Trump Media plans to launch these ETFs alongside a slate of Truth.fi separately managed accounts. The company plans to invest in the ETF and SMAs through its cash reserve, and these financial products form part of the firm's fintech strategy, in which it will use up $250 million to be custodied by Charles Schwab. Now, CoinGate recently reported that Charles Schwab plans to launch crypto trading services by next year. However, it remains unclear which crypto assets will be available when the services go live. So a lot of things are just lining up. So Trump's finalized this agreement to bust out some ETFs out there. We have Paul Atkins, the new sworn-in SEC chair, who's already looking at over 70 crypto ETFs out there. So everything's just aligning just right where this is going to happen, guys. If you can't see it, I don't know what else to tell you. But yeah, so we'll continue on with this news and see how this plays out. And again, I want to see, like, are these ETFs really going to affect the crypto pricing out there? Or is it going to happen like the same time, like crypto's already pumping and it's like, is this because of this or is it not? So we'll just have to wait and see. Now let's go on to some Solana news out there, because Solana is really kind of like it's kind of getting a lot more traction compared to Ethereum. So I have no idea what's going to go down with Ethereum. It's the second largest market cap coin out there. Lots of projects built on top of them. But ever since like a year ago, or I'm not sure when it really happened, but like Solana has really been just taking control over some of that energy that's coming from Ethereum. But this first article showcases that Cathie Wood's ARK Investment makes their first direct Solana investment. So they're just one company in person who are acquiring Solana. And I think we have also Galaxy Digital as well, who sold some Ethereum to buy Solana. So let's go through these articles. So with Solana blazing speed, low fees, and 40% yearly dev growth, this could be a game changer. Now, in a move that signifies further crypto adoption by institutional investors, Cathie Wood's ARK Invest has made its first direct purchase of Solana's native token, SOL. According to a tweet from Solana Floor, the investment firm made the purchase through SolQ ETF, a Canadian-based staking fund. This investment marks the first inclusion of SOL holdings in ARK's US-based ETFs, such as ARKFW and ARKW, or no, it's ARKF and ARKW. It also serves as further proof of growing institutional interest in blockchain. Okay, so she didn't buy sold directly, but she got an ETF. Man, I hate when titles do that. But Cathie Wood's move is a landmark event for Solana. Launched in Canada earlier this year, the Sol Q ETF allows investors to earn Sol staking yields without needing to trade or manage their holdings. It's an attractive benefit for many, and ARK's entry into Solana through the Sol Q represents a significant pivot toward proof-of-stake assets, after previously focusing on Bitcoin and Ethereum. Now, this investment by Cathie Wood's firm could prompt more US-based funds to follow suit, especially as the US SEC shows signs of easing its restricted oversight on crypto ETFs. Now, with the US SEC still yet to approve a US spot Solana ETF, many fund managers are likely to view Canada's SolQ as a viable alternative, thanks to a 40% annual rise in developer activity, fast transaction speeds, and significantly lower fees in Ethereum. Solana has firmly established itself as one of the top performing blockchains, and Cathie Wood's ARK investment coincides with a period of upward price movement for Sol, according to the current data from CoinGecko, and the token has gained 29.5% in the last 14 days. Now, there has been immediate market reactions to this. Following the announcement, Sol's price has yet to show any major shift, rising only a few cents in the last hour at the time of writing, and in January 2024's interview with CNBC, Cathie Wood compared Solana to Ethereum, calling it faster and more efficient network. Now, earlier, you today reported that ARK Invest dropped its plans to launch an Ethereum ETF despite previously expressing strong confidence in Ethereum's long-term value. Now, this new Solana investment signals Cathie Wood's belief in Sol's long-term worth beyond speculative trading, making it a strategic addition to her firm's innovative focus and portfolio. So I guess so she's expanding her portfolio, getting a little bit more diverse out there. But again, just buy the original token. Why are you getting these ETFs? Sure, you get some rewards, that ETF has staking capabilities with it. It's enticing. It's giving people not in the crypto space a feeling that they're in it. So I don't know. I thought she should have just bought the token itself, but to each their own on where everyone wants to do their investments. So just don't listen to what I say to do. You guys do you for how you want to invest. Because again, we're not financial investors here. We're just investors, and we want everybody to succeed. But that was one Solana news article. Now let's talk about Galaxy Digital, how they dumped $105 million in Ethereum for Solana. Now, is Ethereum losing ground? No. But Galaxy Digital is making waves in the crypto space, and it's not good news for Ethereum. On-chain data shows that they've sold around $105 million worth of it. Now, Galaxy Digital is making waves in the crypto space, and it's not good news for Ethereum. On-chain data shows that they sold around $105 million worth of Ethereum over the past 2 weeks and converted most of it into around $100 million worth of Solana on Binance. Now, that's a big portfolio shift that could change the narrative around both assets. Now, why is Ethereum losing favor? Well, this comes at a tough time for Ethereum. After a disappointing Q1 of 2025, ETH has been unable to get back up and above $2,000. Institutional outflow are accelerating, and Galaxy Digital's exit is just adding to the pressure. Now, according to Look On Chain, they transferred 65,600 ETH to Binance and swapped it for over 752,000 SOL tokens. Now, that caused a 4% drop in ETH's price and killed the spring rally, hoping that someone else thought that ETH could take $3,000. Now, Solana is gaining momentum and confidence right now. While Ethereum is struggling, Solana is finding its footprint. The network activity is up, transaction volume is growing, and active addresses are up big over the last month. And Sol's performance may not be immune to daily fluctuations, but it's strong and now trading at $138 after a 1.4% dip. Now, the bullish momentum around Solana is being reinforced by Galaxy Digital's move beyond the ETH to Sol swap. They've reportedly staked $40 million worth of Solana after settling with the New York Attorney General over the Luna dealings. Now, that's a big vote of confidence in Sol's long-term role in the blockchain ecosystem. Now, what does this mean for the markets? Well, Galaxy Digital moves in 105 million ETH sold, 998 million sold bought. ETH under pressure, trading below 2,000 with institution sell-offs and weak settlement. And then there's the Sol in the spotlight. Rising activity, new capital inflows put Solana in position to challenge old guard. So in conclusion, a shift in the crypto power dynamic, Galaxy Digital move may be more than just a trade. It could be the early stages of bigger portfolio rebalancing. As Solana gains traction with institutions and developers, Ethereum's dominance is being tested. The story is changing, institutions are moving, and momentum is shifting. Ethereum is no longer the default layer 1 out there, and there is tons more competition there. So narrative's kind of changing right now. Where is this going to lead for ETH? We just got to wait and see, because it's definitely testing its number 2 spot right now, and also being the number 1 layer 1 with smart contract capabilities. So we'll see what happens. Like, what do you guys think out there? Like, do you think Sol's going to overtake Ethereum eventually, or Ethereum we don't got to worry about? Let me know in the comments down below. But now let's move on to our final news article of the afternoon, where we finally get a little bit more news about that Bybit hack. Like, if you don't know about it, it was one of the largest hacks in history. Like, they had like $1.4 billion stolen by the Lazarus group. But now with updates to that, looks like half of that hack is now untraceable. So Ben Zhao says that Lazarus hackers use mixers, bridges, and swaps to hide the funds. So now half of it they can't find anymore or trace it. But a significant portion of the 1.4 billion in cryptocurrency stolen during Bybit's hack by North Korean Lazarus group has become untraceable, according to the exchange CEO Ben Zhao. Now, in a tweet dealing the current status of the hacked funds, approximately 500,000 ETH, the exec reported that 27.59% have gone dark, largely due to suffocation tactics involving crypto mixers and decentralized services, while 68.57% of the funds remain traceable, and only 3.84% have been frozen. So, now crypto mixers, swaps, and 36,000 wallets. Zhao noted that the primary tool for laundering the stolen funds was the Wasabi mixer, followed by additional dispersion through crypto mixers like Tornado Cash and Railgun. And the attackers also leveraged decentralized cross-chain swap platforms such as Thorchain, XCH, Lombard, Li-Fi, Stargate, and SunSwap to transfer these assets across blockchains before converting them into fiat via peer-to-peer and over-the-counter exchanges. Now, data from Zhao's reports revealed that 432,748 ETH, which is equivalent to 84.45% of the stolen assets, has been converted into Bitcoin via Thorchain, and of that 342,975 ETH, worth approximately $960 million, became 10,003 Bitcoin distributed across nearly 36,000 wallets in a bid to hinder traceability. Now, despite extensive monitoring, only a fraction of the stolen assets remain on the Ethereum blockchain, while 944 Bitcoin were funneled through Wasabi alone. Now, the Lazarus Bounty Initiative, which was launched to tackle these exploits, has received 5,443 reports over the past 2 months, with only 70 validated. Zhao has highlighted that the need for more bounty hunters capable of unraveling mixer transactions and warned the tracing of dark crypto flows will require significant collaborative efforts going forward. Now, the EXCH quits after accusations of aiding the Lazarus group. Among the platform named in the laundering trial was EXCH. The privacy-focused crypto exchange recently announced its plans to cease operations on May 1st, following accusations of laundering $35 million linked to February's Bybit hack. The platform denied intentional wrongdoing and refuted claims of facilitating criminal activity. Now, under mounting international security or scrutiny and what is called a hostile environment, EXCH cited an active transatlantic operation targeting its shutdown, along with its exit announcement. EXCH also said that it will launch a 50 BTC fund supporting privacy-focused crypto tools. So what is that, like a little cherry on the top? Like, no, we're still going to be putting forward for that. But I think after being accused of the Lazarus project, like, if you had nothing to hide, why are you going to be shutting down? That's my thoughts on that. So again, we don't know if that exchange was a part of it or not. Just there was accusations of them doing it. So I don't know. I think they should have just stuck around and let the truth be set free. So, but I just wanted to keep you guys updated on that hack. Where is that crypto now? What's happening to it? Well, a lot of 25% is untraceable, only 3% is frozen, and they're going to keep swapping it. So Bybit's not going to get that back, but he did say that we do need like more capable people to be able to just like untrace the untraceability of some of these swappings out there. But that is it for everything we got going for you. Bitcoin is still currently at 90,000. We're still above. Our fear and greed index is around 38. So we're going up. So people are getting a little bit greedy now. So they're not so fearful. They're seeing that price move and they're going to be FOMOing in like no other. So that is it for the news today. Hope everyone has a fabulous Taco Tuesday. Go eat a delicious carne asada taco for me. I'm not sure what I'm eating today, but we'll find out. So everyone, I will see you again tomorrow at noon. I'll try not to be late, and so take care and buy some Bitcoin.
Tired of jumping through hoops to buy Bitcoin? Frustrated with endless paperwork and invasive identity checks? Introducing Bitcoin Ben Crypto Club's loan program. No KYC required. Say goodbye to the hassle and hello to freedom. Borrow up to $250,000 at as little as 7% interest. Join our community and take control of your financial future. Bitcoin Ben Crypto Club, where privacy meets opportunity. Connect with like-minded individuals and grow together. Visit us today and unlock your $250,000 Bitcoin loan. Your journey to financial freedom starts here.